Welcome gents to a new video where we are going to break down exactly how to get to a 10k a month with your day trading journey from a mechanical model. Okay, in this specific case we are going to be talking about TMB Mech. Okay, so that's a mechanical model I use and I've used it for a very long time. Pretty sure it's almost going to be a year in this month, which means basically from the moment I started trading it, which was June last year, I went from 0 in funding up until now to $1 million in funding. I basically scaled to $1 million in funding in 10 months and I got like 40 plus payouts, which I'm gonna put around here everywhere while you're watching this video, just so that I can share some proof and that I know what I'm talking about. So let's get straight into the video. Okay, so for you to understand this model, I'm going to break down a couple of trades from which you can basically learn or just see how the model works, even though there's a lot of videos on my TikTok, on my Instagram, my YouTube where I detailed explain the whole model. So I'm just going to go ahead and give a couple of examples. Okay, so the first one will be AUD USD on 26th of May 2025. Basically, what do we need to know is we trade, so this model is based on the previous session liquidity. So we need to know about sessions. First session is going to be Asia, second is London, and third is New York session. Asia open is going to be at midnight, London open is going to be at 8 a.m. and New York open is going to be at 1 p.m. for AUD. For NQ it is quite different because it's indices, so it's going to be 2:30 p.m. for New York open instead of 1. Now, we do not care about like the closing of the session. Basically what we do is midnight candle is Asia, 8 a.m. candle is London, and 1 p.m. candle is New York session already. Okay, so let me go through a couple of these trades. This is possibly the simplest model you've ever seen. So I'm going to break down the first thing that you need for you to scale to 10k a month is the strategy. It has to be a profitable strategy you can trade. Ideally Mech strategy, because it's way more simpler and easier to trade than discretionary, and you will get results way faster because the model is so simple you cannot really fail to execute it correctly. There's not much psychology problems, whereas with the actual discretionary models there is a lot of psychology problems that haunt you through your trading journey. So let's get straight into it. Okay, now that we've marked out the sessions, we need to go to the 4-hour time frame to see what is our bias for the day. The way I look at bias is also the simplest bias outlook possibly ever. All we are looking for is the most recent breakout structure on a fractal. Okay, so it doesn't have to be the last fractal or anything, it has to be the most recent breakout structure. So we are looking at the candle that actually closed above or below a fractal. That is how we are looking for a bias. So if the latest break structure was to the upside, we are going to be bullish for this day. If the latest break structure was to the downside, we are going to be bearish. In this case, we got a break structure to the upside right here, and that is going to be our break structure because this is the latest one. Before this, we never had, before this, the latest one was here. So we are bearish through all of this, and then we got a break here, so now we are bullish, and we haven't had a break to the downside, so we are still going to be bullish. Now that you know this, since we are bullish, we are marking out Asia low in this case, and we are waiting for price to take this out. Boom. Price took this Asia low, and that's the first step. The second step is people who saw this rejection to the upside, basically they are entering too early in the market, and we are waiting for price to fake them out, which is so-called the fake out. For the fake out, we are marking out a zone. But after the sweep, for the fake out, we need the first bullish candle to arrive after the sweep. So this was a sweep. Now we need the first bullish candle, and it happens right here. And now we can mark out the fake out zone. The fake out zone is going from previous session highs to that low of this session after the first bullish candle. Okay, so the first bullish candle has to happen, and then you put the fib tool to the low of the session. Okay, so now this 0.079 level is going to be our fake out zone, which means price has to retrace back down into this level for us to consider this a valid fake out zone. So until that happens, we are not looking at anything. This very candle touches this line, which is just enough for me to say this is a fake out, this is enough. Okay. Now that we got the fake out, we need one last step, and that is a break structure in our way. So if we are looking for buys, we are looking for a break structure to the upside, and that break structure has to be from the most recent fractal. So obviously we are looking only at the highs because we are looking for a break structure to the upside. So this is the most recent fractal. So we are looking at that, and now we play the price section, and we actually get a break structure right on this candle. Boom. And now we need the Fib tool to get the entry into the trade. The Fib tool will always go from low of the session to the high of the broke structure, and if price extends to the upside, we are just going to move the Fib tool accordingly until we get filled into these levels. Let's wait for that. Okay, boom. Right here it reaches 0.618, which is our fill level. We set the entry there. This is going to be a limit order. As soon as price starts coming back down, I'm setting my limit orders at 0.618 and my stop loss at 1.0255. For take profit, always 3R. Now once you've actually entered into the trade, all you have to do really is let the trade play out. Boom. Let's get into the next example. Okay, here we are at the next example, which is still AUD/USD. Now this is going to be a short example of the same exact trade. So first thing we did the last time is mark out sessions. So 8 AM London, 1 PM New York, and midnight for Asia. Now we go to the 4-hour time frame to see where the last break structure was. Okay, so what we have here, we have a gap. That really doesn't matter. Price went down and closed below these fractals, which means this is the latest break structure to the downside, so we are going to be bearish for this day. Okay, before this we were bullish from here, but then price broke down to the downside, so we are going to be bearish for this particular day, which means if we are bearish, we are going to mark out Asia high. Now in this whole range of Asia, this candle right here, the last one, is going to be the high of Asia, and then we are waiting for a sweep. As you can see, this 8 AM candle went straight through the Asia high, which is a sweep. So we said 8 AM is London, so this is a valid sweep of liquidity. Now we need the first bearish candle for the fake out. We are waiting for that. It happens right there. Now Fib tool is going to go from previous session low to that high of this session after we got the first bearish candle. As you can see, this is going to be just vice versa of the buy example. So with the buy example, the fake out zone went from previous session high to current session low, and this time it's going to go from previous session low to current session high. And now this 0079 level is our fake out zone, which means price just has to go back up, and this candle right here touches the line, which is just enough for a fake out. Now we need a break structure. For that, we are looking at the most recent fractal on the lows, because we need a break structure in our side. We are bearish, we are looking for sells, so we need the break structure to the downside, which means we are paying attention only to lows with a fractal. For now, this is the most recent one, but we might get a new one because this one is pretty far away. So let's see. Right here, we get a new fractal on the low, so we are paying attention to that. We got a new one, so we are paying attention to that. Okay, this candle closed below this fractal, which means this is a valid break structure. So for a break structure, also, just if you didn't watch any of my other videos, it has to be a full body close. It cannot be only a wick. The body has to close below the fractal for it to be valid. Now that we got the break structure, we need to put Fib tool from high of the session of this specific session to the low that broke structure. If price was to go down, let's see if this tapped us in. This didn't tap us in. Instead, it went down. So we are just following it until it actually taps us into the trade. Extends once again. Extends once again. Let's see. Starts going back up. I'm gonna set my limits. 618. Stop loss again at 1.025. 3R for take profit. And now let's see if we get filled. We are filled in the trade, and after that we just have to let it play out. As you can see, this was a short and a buy example, two of them, and what you can really see is that every single trade is going to be exactly the same. That is the pro of having a mechanical model, because you don't really have to worry about many variables, because every single trade is the same, which means there is no hesitation when entering the trades, because you're setting limits at the level and every trade is the same. There is no second questioning. Is this trade the correct one? Is this that? Did this sweep liquidity? Is this good enough? What's the 1 hour saying? What's the 3 hours saying? What's the daily saying? There is really none of that. Now, of course, this strategy does lose, of course, as any other strategy. This strategy has around 40 to 43% win rate with 1 to 3 RR, which is profitable if you know anything about day trading. So here it is. This is 2 examples of this simple mechanical strategy that made me profitable and that I still trade to this day. And I think I'm going to keep trading for the rest of my life. And it keeps working. If you backtest this and see, you will find out that this is really good stuff. This is actually the only strategy that ever worked for me. So for the first 3 years of my day trading, I was unprofitable. And then when I found this strategy, I actually got my first payout within a month from trading this strategy, and then I never forget that. So this is my first payout, $81, and basically from that payout I never stopped being profitable. This was my first payout, and then after that I kept getting consistent profits, consistent payouts, consistent passes, consistently scaling, and all of that, all of the above. So now that we covered the exact strategy you can use, let's go and cover how are you going to scale from that, for example, $81 payout, which I got from a 1% payout on a 10K, to something bigger. Okay, so what do you need to know about scaling into prop firms so that you can get more funding and more funding and more funding and more payouts and bigger payouts? You need to be consistently buying accounts. Prop firms, if someone told you that you can buy one account and then try to pass it or fail it, and then buy another one if you fail it, or if you pass that one, then buy another eval, is telling you shit, okay? That's not how prop firms works, especially with a model like this. The way prop firms really work is you want to buy prop firm accounts consistently throughout the months, which means multiple accounts per month. And what is that going to ensure you? That's going to ensure you that you have a fresh start every single week or something like that. Depends on how you do that. Which means, theoretically, if you buy 2 accounts and you go onto a lose streak for this week, and the next week is a banger week, you might pass phase 1 on both of the accounts, or you might not even pass. You will just bring them out of drawdown. But if you were to buy 1 account this week and 1 account the next week, that means the first account that went through the lose streak will be down, but the second one won't, and then that second account will catch the winning streak and it will pass instantly. It will pass that week. This one will get brought up out of drawdown, or maybe even past phase 1. But you just have to see what I'm telling you. So the key is to pass the account. Fail or pass fast, which means you're going to be doing higher risk so that you can actually do that. And now, once you actually apply this, you will have basically 2 weeks of day trading. You will have 1 account passed and 1 account past phase 1, or maybe up in profit in phase 1. Which means you just secure yourself, instead of having 2 accounts that are just back in profit or maybe past phase 1, you will have 1 account still in phase 1 or just in phase 2, and 1 account that passed both phases, which now means you have a funded account. Once you have a funded account, you have to lower your risk, because now you gotta keep that account for long, keep it and have it for a longer time so you can get consistently payouts out of it. The risk I do is 0.5%. Just because that's what my losing streaks tell me. You don't have to do the same. You can do whatever fits your strategy if you're doing anything else. But I do 0.5 with this strategy. And that basically makes sure that I don't lose the account, but I'm going to get payouts consistently, because the model is profitable over the long run. Which means I might not get a payout every single month, but I'm going to get a payout within 3 months, for example. Which means if you have big capital, that doesn't really matter, because if you don't make money this month, but the next month is 10-15K, you're chilling, okay? That's what I'm trying to get at. That's how trading works. Trading really can't be consistent in terms of I'm gonna get so much payouts every single month. It doesn't really work like that. So yeah. So basically, start from lower accounts, smaller accounts, and use the payouts to buy bigger accounts. Okay, the best way that you can do this really is 10k ACGs that are $40 with the code 10k for 40, and basically you can buy accounts, start with them, and then aim for a bit larger payouts so that you can get within 1 or 2 payouts you actually have money for 100k. And then you buy the 100k, and all you do is just do everything the same. It's going to be very easy. There will be no emotions included into it because you know that you bought that account with the money from already the strategy, the money from money that day trading actually made you, so you're not really putting any of your money into it, which means it's going to be easier and no like psychology getting involved into the process, which means from a couple of 10Ks you get payouts, and then that payouts fund the 100K. You repeat the same thing. If you lose it, that's fine, because you are trying to pass it or fail it as quickly as possible, which means even if you fail it, there will be those 10Ks still there that can get you those payouts. That means you can buy the 100K again. Eventually, you are going to pass the 100K, and after you pass the 100K account, then you aim for the same thing. Risk 0.5%, aim for 3% to get a payout. That's 3% payout, risking 0.5%, $2,400 worth of payouts. With that first payout from a bigger account, all you really have to do is don't be greedy, don't be a retard. Know that you are in this for the long term. Know that you are here to scale up so that later down the line you can actually do the shit you want. But as of now, hold your fucking balls and put this money into more evils. With $2,400, you can buy 5 to 6 100K accounts depending on the firm you are buying them with. And now you are practically chilling. You have 500 to 600K in evils loading. Don't buy them at the same time. Don't be stupid. Remember what I said. Buy them across the month so that you have a fresh start on each of them. Don't buy them all in a single day and then all the 3 comes and you lose all of them. Be smart about it. And now you have 500, 600K of evils and a 100K account, and maybe a couple of 10Ks that were funded as well. And you're going to pass at least 2 of them. And that means your money is going to get back. So you will actually lose $2,400 because you're going to buy 5 to 6 accounts with that money. You might end up blowing 3 of them, but you will pass 2, for example. Pass 2 out of 5, 6. This is very low, but let's just keep it like that. You can obviously pass all 5 or 6. You can pass half. You can pass only 2, or you can pass only 1. What I'm trying to get at is once you actually pass, now you have 200K worth of funding. Or if you pass 2 out of 6 or 5, you have 300K of funding at the moment, which basically means if you actually, let me also do this, so just so you can see it visually, if you go ahead and get 3% worth of payouts of that 300,000 in capital, you are getting 9K, exactly 7.2K you are getting landed in your bank. 7.2K. Boom. Now that you actually have this, then you start doing something else. You start take 30%. You can even take more. But what I do is from every money I make, I take 30% away and put it into prop firms again. And then you have 7.2K. You can put it all back into prop firms to repeat the same thing, scale up even faster, get even more money, or you can take only 30% of that and actually buy again more accounts from that, 200Ks, 100Ks, and you are there. you scale up pretty fucking fast. As you can see, this is very fucking close to your first 10k month. If you passed an account from here, it's let's say you pass 3 out of those 6, then we are looking at a 10k right there. We are looking at 10k, and that's pretty simple. You are obviously going to take the same trades, which means as soon as you get a 3% payout, that means you're going to get 10k into your bank account right there. And you're going to take their money and you're going to keep buying fucking evals, and you're going to eventually scale to 500k, 600k, a million funding. And as soon as if you keep trading them the same way, you get to the 3% gain, boom, pull out the payout, you're making a shit ton of fucking money. And this is basically all you need. You have to keep it simple. There is no need to complicate this. This is basically all you need. You just have to stay level-headed through the losing streaks, because there will be losing streaks. Every strategy has them. The only psychology included with a mechanical strategy is that part when you have to hold your balls through a losing streak and just keep trading it normally like you would. Don't try anything else. Don't try anything stupid. Stay calm and level-headed. Remember this video. Remember this right here. Remember what you have to do to actually get to the point. And that is pretty much fucking it, gents. This is basically all that you need to actually be a full-time day trader, living from day trading, and actually make a shit load of money, okay? That is all, gents. I spit some real fucking value in this video, so I hope you respect that, and see you in the next one. Use this to your own will. Obviously, I'm not a financial fucking advisor. I'm telling you what I did and what worked for me, and that could work for you if you do the same that I did, okay? So, thank you, boys. See you in the next one.